I'm Charlotte McLeod with investingnews.com, and here today with me is Joe Mazumdar, editor of Exploration Insights. Thank you so much for being here. Great to have you.
Thanks for the invite.
Of course, always good to catch up with you, and it's been a while. We're here once again at PDAC. Officially, this is the end of day 2, so I'm curious. You've been hopefully out on the show floor taking a look around. I've been stuck up here. What is sentiment like? What have you been hearing?
Well, I got here Thursday night because I went to I do a short course with some colleagues at PDAC, and so one reflection of sentiment that short course had a capacity I think of about 90 or 100, and that sold out, and then they added, and that sold out as well. So that's one indication of positive sentiment. And then the next day, I presented at the Metals Investment Forum, and that had 63 companies presenting, which was, I believe, a record, and the amount of attendees as well. I had 7 companies, and it was really quite a buoyant atmosphere, let's say. And then, I've been walking the floor, the core shack area is very full. There's a lot more people. There's a lot more people with money, I would say, right now. A lot more pens and toques and socks that you could pick up if you're that way.
I gotta make it down there tomorrow. I'm gonna make it happen.
Especially if you need socks or something.
Well, maybe for Toronto, I think I would always need socks. It's so cold. All right, so we last spoke a year ago at this same event. So I wondered if we could talk about how your portfolio is looking right now in terms of commodity breakdown, but also company size.
Okay, so that's interesting. So we usually keep the portfolio to 20-ish companies, over this year, I've sold one which was underperforming for political reasons, and then I sold a half of one that had done really well, which was a rare earth developer, believe it or not. And then recently, this morning, I got the announcement that another company in the portfolio got taken out, which was Arizona Sonora Copper, by Hudbay, and which an all-shares transaction, which we did well from. Now I have to decide how I play this in terms of selling into this or keeping the Hudbay shares. And what I've seen in these markets, sometimes, it's best to, keep some of the shares, especially if you're bullish copper, which I am.
Okay. Yeah. That's a very immediate.
Yeah. And so with that, reduction of a company, then I'll be looking to add.
Yes, of course. That was the next question. If you have cash that you're looking to deploy at this time, so then you will.
Yes, absolutely. And obviously it's harder because everything's come up quite a bit, but then whatever your minimum was in terms of value, you're probably lifting that 4 or 5 times. In terms of what your base is, your liftoff point.
Yeah, can you share where you might be looking for opportunities? Because, things are expensive, but then there is that potential for so many things to go up.
Yes, and the problem is that when you look for something and you say, well, this is cheap compared to this other thing, and then you go, well, why is it cheap? And it might be jurisdictionally in the wrong spot. Still, the management team doesn't have great access to capital. They might get money, but they might have to issue warrants or do something that might not be great for the share count. Or there's a technical issue with the underlying deposit. And so when you find deposits that don't have that, a fatal flaw, let's say, good jurisdiction with good management, you will have to pay up for it. And I'm not worried about paying up for it because I've seen things from there go up even more because more people are attracted to it. And when it reaches, and this is the interesting thing about this market, is when you do increase liquidity, you get a boom in your share price when you do have news because suddenly you become more attractive to people looking for more liquid names and higher market caps. And so you might say, oh, it's $1 billion, so I should sell this and go back to something that's 100 or less. But you might find that might outperform.
That's very tricky. And
Yeah.
I think it leads into a question I had. I was going to ask you about the overall health of the juniors as a segment right now. It sounds like probably pretty good.
Yeah, I mean, I did some breakdown of financing, and what I've noticed is it's a bit asymmetric. So a lot of the money has been going to the same usual suspects, and it's the rest of them that are sort of they're making more, but they're not doing fantastic. But I've seen companies that have asked for the money from the market and have been easily upsized, sometimes double. Because there's so much demand for that company, for the asset, for the jurisdiction, exposure to that management. But somebody else still has to issue a full year, 5-year warrant, to gain that financing. So it's still a market where there is asymmetry towards the better names.
Well, I would say that's kind of good to hear.
It is good, but yeah, and in this market, we probably, where if you're waiting for less companies to think about, you probably have a few more to think about. But if I do my filtering, I don't think about those companies. I have a narrow window in terms of what I think about.
Very good. So that gives us an idea of how healthy they are. What are the main challenges for the juniors right now? It sounds like a lot of them have access to different amount of capital, but they have that coming toward them. What are the main challenges?
Well, I would say for the juniors that are exploring, let's say grassroots or advanced stage, right now with the higher prices, we are seeing creeping nationalism, where we're seeing higher royalties being imposed by some West African countries like Ghana. We're seeing higher ownership requirements like Burkina Faso, Kiaka potentially with West African resources. We're seeing security issues like you probably talked about before with Mexico. We're seeing permitting delays, whether it's British Columbia. They're getting through their permits in Peru, but that has been an issue. But on a positive side, a lot of the elections right now in South America, past tense with Argentina, now more recently Chile, Bolivia maybe, and also upcoming with Peru, a lot of these countries are probably moving to the center right. So that is more of a positive for business and for mining.
Yeah, that is a theme that's come up a few times here, that move toward the right and the potential benefits for mining. So that will be interesting to track. I wonder if we can go back to Mexico and talk about that a little bit more, because that's been another jurisdiction that's been coming up quite repeatedly today. So
Yes.
how do you feel about that? I've been being told a lot that if you want to be, especially in silver, you have to be in Mexico. So what are your thoughts on it as a jurisdiction?
Well, I'd argue you don't. Because I went out of my way to find things over the last 3 years out of Mexico, but silver. So in terms of a demand supply, they, one in Northwest Argentina has done really well because it is a silver play that's not in Mexico, and it's advanced. And that's another thing that's happening is that when people, on the theoretical Hassan curve get to the orphan period, a lot of the retail and those people looking for that initial bump leave. But we're not seeing much of a down drop because there's so few development projects that people are keeping those, and the ones that have done best in the portfolio have been advanced projects, not the grassroots explorers. So they've done very well for me. So getting back to Mexico, the issue is, in anything, if you give somebody money, can they execute their plan? And so if it's a permitting issue, they can't execute their plan. But then if it's a security issue, that becomes another, problem. And in Mexico, I give full points that it's not a blanket for this kind of violence, cartel-led violence. But for me, I don't want to spend my life being a cartel expert, and concluding things that I have no idea about. I'd prefer to go someplace where I don't have that overarching issue that I might get an incident like this show up on the news.
Yeah, there's a lot of uncertainty. It seems like there's a lot of guessing going on right now.
Yes, and everybody in Mexico obviously wants to be positive about it. But if we take a lot of the M&A that happened previously a year or two ago, it was for Mexican silver assets that were producing, whether it was First Majestic, Gato, Hecla for Silvercrest, I believe, and then it was Mag Silver got taken out by Pan American. But what was interesting to me was Fresnillo, who's the operator of Juanicipio. The easiest transaction you can ever make is to take the remaining part of the mine you already operate, because there's zero due diligence,
Right.
because you are the operator. But they didn't do it.
Interesting.
Yeah. They did a small transaction in Canada, which is nowhere near as the size of Juanicipio. But it was interesting to me that they didn't do it.
Yeah.
And they're Mexican based.
Yeah, that's maybe a little bit telling.
Yeah, that's so, and I've known from my time in South America looking at other projects that they're out and about looking at silver projects and that outside of Mexico and into the States.
Okay. Interesting. And before we turn the camera on, you had mentioned some other interesting M&A type activity for assets where maybe companies are essentially looking to balance out their jurisdictional risk. Can you talk about that? Because that's quite fascinating.
Okay, one would be Orezone. So what has been happening, I mean, obviously we all know what's happening in West Africa with the military juntas and some countries looking for additional ownership. So you can have a free carry for about 10 to 15%, I believe it is, and Burkina Faso has that. But now on the new projects, like West African Resources has one mine that they're mining and they're doing fairly well on it. Their share price has done very well. It's ASX listed. But their new project, Kiaka, it looks like the Burkina Faso government is negotiating to get a bigger chunk of that, like a 25% chunk. And so on the sidelines is Orezone, that's going from mining oxide ore, gold, in small open pits to going to the sulfide, which would require a bigger mill, maybe 2.5 million tons per year, and maybe expanding it even more further to extend the pits deeper. But now there's a threat, even though the government has sort of told them that, maybe we're not going to demand 25% of yours. There's still that underlying risk that their investors are worried about. So if they're going to the market to raise capital to do it, and their last capital raise was actually on the ASX and not the TSX, because they thought there was more demand for that kind of West African name and less geopolitical risk discount if you raise money on the ASX versus the TSX. So they did that. They raised money, but then to do the next step and raise additional money, a lot of people are wondering, well, how much do you get? And so their latest transaction, which would be revealing, is that they bought Casa Berardi, an operating gold mine and a bit of silver, I think, in Quebec, I think it is, and from Hecla. Between upfront costs, contingent payments, deferred payments, it's over $500 million. They don't have that kind of money right now. But so Franco-Nevada has come in and give them $100 million stream on the gold. So that's one form of diversification to show growth outside of West Africa. Another one would be Eldorado Gold, which probably makes less sense for some because it's Eldorado Gold. They have development projects in Greece, 2 or 3. One that's supposed to be going to go into commercial production this year. And then they bought Foran. So Foran has the McIlvenna copper zinc deposit in Saskatchewan, underground, getting into commercial production. Underperformed last year versus Eldorado Gold, but they bought that. So you're wondering, well, you're gold, why are you buying copper? And also you have all these development projects that you're building, so why do you adding another development project? Granted, this one's close to commercial. And then for Foran, they took a hit in their share price because they had to go back to the capital markets and raise another 350 million to build their project. So their shareholders are saying, why didn't you wait till you got into production and got a re-rate before you accepted a takeout target? So both their share prices went down after the announcement.
Oh, that's not, nobody wants
Yeah,
that.
so neither shareholder liked that.
That's really interesting. So, although for the gold company going toward copper, that does seem to be a trend among the bigger miners. They seem to be
Yes.
wanting the copper
But
exposure.
that's changed now because if you
Okay,
look at Barrick, now they're talking about doing an IPO on North America.
right.
So North America would be Nevada, it would include Pueblo Viejo and Dominican Republic, but it would not include Reko Diq, which is their big copper development project in Balochistan, Pakistan, which has its own issues, and the expansion of Lumwana in Zambia. So all that copper growth would not be in this company.
So why do you think they were going toward including the copper and now no, we should
They
split
changed
it?
CEOs.
Right,
So
of
Mark
course.
Bristow was thinking about copper. He didn't want to pay a premium on some of these assets in less geopolitically risky jurisdictions. So he basically built where there's more of a discount, places like Africa, the Middle East, or Central Asia like Pakistan. And he's building those. Reko Diq is not a small project, but it's in a problematic area, not only security-wise but infrastructurally. But so they have Nevada, which is very low geopolitical risk. You get a premium for assets like there, but they're not getting it. And then also they have 4 Mile, which is an incredible project. 17 gram underground. You know, I don't know, tens of millions of ounces, and so they're not getting the premium on that asset, and that's probably their jewel in the crown going forward. So they want that out there so somebody could just value that
Yeah.
unfettered by all the risk of Pakistan and Africa. So that's the reason they're doing it. But if you look at the valuation, it's probably the majority of their market cap. So if their market cap's 80 billion, 60 billion of that is that spinout. And so now the question is, how much does Barrick own of the spinout? And is that become a takeout target for somebody like Newmont?
So do you like this split up? Does it make sense to you? How do you see it playing out?
Well, they've already said that they're going through with it. The board has
Yeah,
approved
yeah.
it. Yeah. So I see it happening.
So I mean more, will it be successful?
I mean, the problem has been with Barrick. Some of the discount they've gotten. I mean, they've underperformed the GDX and more underperformed their arch nemesis, which is Newmont. And some of that rationale is because their production growth has been declining, and it appears that some of that's related to poor operational performance. And so they might get a discount because it's still them that's operating. But does somebody else come in and take over and do better with it? And do they get a better premium if, like, a Newmont operates it rather than a Barrick? I don't think, technically it doesn't really matter because all those people will still be there. Yeah. And they go back from being Newmont employees to Barrick employees all the time. So, I think they will get a premium, and if the gold price keeps doing what they were, it will make a lot of sense to do it because you wouldn't have a lot of growth in Pakistan and Zambia versus growth in Nevada.
Well, and speaking of the gold price, I know that you are not a person who is trying to choose companies based on what the metal price is going to do, but I thought it's worth asking. There's a lot of focus on gold right now. Where would you place us in the cycle?
It's not really a normal thing what's happening right now, and usually, it's about real rates. It's about the trend of real rates. What's the economy doing in the U.S. mostly? Are real rates going down? Or are they going up? How many interest rate cuts are we going to get in 2026 and all that? That's what's not driving it now. I mean, we went from a real boost at the end when nobody's really looking at the market, when the new administration was talking about Greenland, and then right around New Year's now we had Venezuela. So we seem to go from geopolitical crisis to geopolitical crisis. Most of these impacts don't resonate for a long term, but if you have one after another, they never revert. The price never reverts. And now you have an incident right now in Iran with the U.S. administration and Israel that we don't know what the end game is there. And so that will have a longer term impact on gold price, but also it's impacting oil prices. And so that will impact inflation. And so that in the end will impact gold price again. So all of this will be something that'll resonate longer than, let's say, something like Greenland and what happened in Venezuela.
Yeah, it does become a little bit circular and it all comes back to gold.
Yeah, but definitely what's happening now
Yeah.
is more material
Right.
than Venezuela or Greenland.
Yeah, we'll have to wait and see how this one. It's been pretty tough asking these questions today because I imagine everything changes tomorrow, but we'll see.
And they'll change again. And the fear you have is to say something and have it refuted the next second. But what I see is that this thing is not going to end anytime soon.
Yeah, I think that's a
And now you're
reasonable
drawing
thought.
everybody else into it, potentially, the Straits of Hormuz and all that distribution of oil be problematic. So yeah, it's not, it's a time to hold gold probably, but it's not something that's ephemeral. It's not going to have a short-term impact.
Yeah, I agree. And so on the note of geopolitical tensions, we see how it impacts gold. The other thing that's being really drawn into this is critical minerals. And you're mentioning you had this rare earths play that you're involved in. I think we talked about that at some point in the past. So that's pretty interesting. Are you doing anything else in the critical minerals sector? How are you approaching that?
Well, my biggest critical mineral commodity exposure would be copper.
Because it is critical now.
And so that company was just taken out this morning. Arizona Sonora was taken over by Hudbay. Critical mineral, in the U.S., which is pushing critical mineral projects and favoring permitting and that. But what's favorable about that project is actually going to produce cathode, so it doesn't have to go to a smelter in Asia. It could stay domestically there and go straight to the end user. So copper's another one. And I've done quite well on a company that has hit copper and nickel up in Minnesota, which is Talon. And then Talon did this transformational, where they bought the Eagle Mine and the Humboldt Mill from Lundin. And so they've just set themselves up to be another critical mineral producer right now in the U.S., U.S.-based, U.S.-focused. So jurisdictionally, for critical minerals, I really like the U.S.
Yeah, I think it was hard, at least for me, to tell initially, are all of these different things that are being announced by the U.S., are they going to have an impact? But now, certainly, it seems like yes.
Well, I've got a gold developer that went on to Fast 41, and there's a transparency list, and then there's a covered list. The covered list is the one you want to be on, where they actually dedicate an individual from the department to actually look at how your permitting is going. So it's not you phoning these people up, it's them phoning their own people up to make sure they keep to their own deadline. So when they give you a schedule, it's not going to be delayed.
Yeah, very, very, that's quite concrete.
Yeah, exactly. And that the market could take.
Yeah.
He goes, okay, it's going to take whatever, 2 years, but it's a solid 2 years. It's not going to be 2 going to 10.
Yeah. Okay, really interesting. I don't want to keep you too long because we are at the end of the day, but I'm going to give you my fun question that I've been asking people here.
This has all been fun.
Oh, good. I think this one is extra fun in that case. So the scenario is, if there was a young investor who had $10,000, they want to come into the resource space, they don't have any exposure, how would you suggest that they approach that?
One, think about your own thesis. Are you thinking gold? Are you thinking silver? Are you thinking critical minerals? And once you got the commodity sorted out, then you figure out how much work do you want to do on this investment. Because if you don't want to do any work, then just buy an ETF, either on the commodity or on the equities, depending how much leverage you want. And then if you want to do more work, then go into production. If you want to do more work, then look at development. If you want to do like very high risk and want to do even more work, then you can go into exploration. So manage manage how much work you're willing to do on your investment in terms of the liquidity of that asset. The more liquid it is, you don't have to do a lot of work because if you make a mistake, you can get out right away. Problem is, as you go into the juniors, if you make a mistake, you'll eat that for a long time. It'll be hard to get out.
I think that's very reasonable, and I'll let you go unless you had any final words that you want to end on.
No, I think that's great.
Perfect. Well, thank you so much. Great to have you once again. Hope to do it again soon.
All right, thank you.
And once again, I'm Charlotte McLeod with investingnews.com, and this is Joe Mazumdar with Exploration Insights.